Good morning, and welcome to Answering Your PPP Questions. My name is Dana O'Donnell, Director of Marketing with Szaferman Lakind. Attorney Scott Borsak, who is a partner and chair of the Szaferman Lakind Business Department, will be presenting today's program. Before we get started, I want to let everyone know that today's webinar is being recorded and will be emailed to you within 24 hours. It will also be available on our website, szaferman.com. Should you want a copy of the presentation slides, you can download from the Handouts tab. Scott will be taking questions at the end of the presentation, so please submit your questions on the Questions tab, and we will try to get to as many as possible. Let's get started. Scott?
Thanks, Dana, and good morning, everyone. I want to apologize for the couple of minute late start. We were having some technical difficulties, some of which continue. I am unable to activate my webcam here. So you're just going to have to go with the disembodied voice talking over a lot of those slides. We'll try to get that corrected for another time. So here we are again for another installment, as so many of you have heard me say, of this show that never ends. And with the Flexibility Act, it's likely that the show has been extended, and we're going to go on for quite a while answering questions as the SBA continues to provide new guidance. And just this past week, the SBA did provide us with some more guidance, so things continue to change. I'd also like to thank so many of you who, besides sending your questions by email, have also expressed your appreciation for these programs. They are time-consuming to put together, but we hope you all find them helpful, and we'll continue. But your kind words are very much appreciated, and I wanted to acknowledge that before we get started today. So, because I'm a lawyer, there are disclaimers to everything. You've heard me do this before. Today's program is for educational purposes only. Nothing in the program is intended to create any attorney-client relationship or to constitute legal advice. If you want legal advice or want to engage the firm, you certainly can do that. And obviously, we would be providing legal advice and opinion at that point. So, having gone through the necessary disclaimers, let's get into the program. A lot of you have asked about the Flexibility Act and what did it add to the CARES Act. By way of background, the House of Representatives passed the Flexibility Act by a vote of 417 to 1. The Senate passed the bill without objection. I wonder what that one person was thinking in the House, and was this the place where he wanted to draw the line and get some notoriety? Generally, the Flexibility Act extends the covered period for forgiveness for spending an additional 16 weeks. So the initial period was 8. We're now up to 24 with the 16-week addition, or December 31st, whichever is earlier. And that the December 31st would be a cutoff for loans that originate in July. There are a number of banks, as I said, that still have funds to loan. I don't know who they are, but they do exist. And the last date that the SBA will issue an approval for a PPP loan is June 30. So we're running up against that approval deadline. And since the SBA has 10 days, the lender has 10 days to fund a loan after approval, there shouldn't really be any loans that are originating after July the 10th. The spending period, generally, that period outside of the forgiveness period in which you can spend proceeds of a PPP loan on eligible expenses, is extended to December 31st. And I know this is a source of some confusion for some borrowers. The CARES Act, which encompassed PPP when it was originally passed in March, created two periods for which borrowers should be aware. There is one period that allowed borrowers to spend money on eligible expenses, and that period originally was June 30th, and that was extended by the Flexibility Act to December 31st of this year. The other was the period that you had to spend proceeds on eligible expenses in order to get forgiveness. Originally, that spending for forgiveness period was 8 weeks from the day the loan funded, and as a result of the Flexibility Act, it's now 24 weeks from the date the loan funded. So these two periods exist and coexist together in the same statutory scheme. You can spend PPP proceeds outside of the 24-week spending period for forgiveness. The difference between the two periods is that in the period that ends December 31st, after the forgiveness period ends, your spending in that generally longer period has to be repaid, whereas the spending in the 24-week period may not have to be repaid if you're eligible for forgiveness. And a lot of your questions have been based on, how do I get forgiveness? What activities are going to result in me getting forgiveness, and how do a number of the penalties work? So two spending periods, one now at 24 weeks where you can get forgiveness, another that ends on December 31st where there is no forgiveness and you have to repay the money within 2 years, unless your bank agrees to extend that repayment period to 5 years. The Flexibility Act also reduced the mandatory payroll spending from 75% to 60%, which also means that the non-payroll amounts went up. So you can now spend up to 40% of the loan proceeds on non-payroll expenses. And although the Flexibility Act seemed to provide that you had to spend 60% on payroll to get any forgiveness at all, the SBA, as it has done at least one time before in guidance, has said that the percentage is not a cliff or threshold, and that you can get proportionate forgiveness, and you'll get there by limiting the non-payroll spending to 40% of the total amount spent for which you seek forgiveness. There were also two safe harbors that were added in the Flexibility Act. One excludes consideration of FTEs who cannot be rehired, and another for the inability to return to the same level of economic activity that existed before February 15th of 2020. And there's been a limited amount of guidance on both of these, so we'll be talking about some of that in other questions. How many tests are there to determine whether a loan will be forgiven? Well, there's a couple. The first is the 60-40 test. No more than 40% of total expenditures can be for non-payroll expenses and 60% for payroll expenses. The second is the now infamous FTE test. You have to employ at least as many FTEs after the loan origination as before, and all employees who work for the borrower during the first quarter of 2020 have to receive at least 75% of what they would have received in the 24-week covered period based on an average rate from the first quarter of 2020. So those are the general tests that borrowers need to concern themselves with. Do the FTE and salary reduction penalties apply together? This was a question that we had talked about in a number of programs, really dating back from the first program that I put together. And the SBA has issued guidance, and the answer to that question is no. An employee not rehired could technically create two reductions to eligible spending, one for the percentage reduction in workforce for failing to maintain FTEs, The other for the reduction in compensation below 75% of Q1 wages, which this employee would have received if they were still employed. So what the SBA has done in guidance, and this guidance is a couple of weeks old by now, and a couple of weeks in the life cycle of PPP is probably months or years in other legislation based on the pace of change here. The SBA provided that only one penalty will apply, and that penalty is going to be the FTE penalty. So if you have a situation where an employee is not returned to employment, and obviously you're facing both of those penalties, this guidance is helpful in that we're only going to consider one of the forgiveness reductions, and that's a percentage reduction on account of having fewer FTEs. But that's a good question. Will a bonus given to an employee after funding of a loan be counted toward forgiveness? So we know that employers have to pay their employees at least 75% of the compensation they would have received using the first quarter average salary rate. The amount of salary paid in the covered period that's eligible for forgiveness now cannot exceed $46,154. That's based on a 24-week covered period. Remember that the most an employee can be paid with PPP proceeds, and to have that payment eligible for forgiveness is $100,000. And what the SBA has done has increased the prior figure, which I've actually just gotten out of my head, the 15,386, and it's now 46,154. Employers are able to provide raises to employees in their covered period, and guidance allows for bonuses and hazard pay to be treated as compensation as well. So with the higher per employee spend during the now 24 weeks, most borrowers should have little trouble spending their loan proceeds. Does the 24-week spending period begin when I reopen my business? Again, I've never seen any justification for this anywhere. It largely has been the musings or wishes of some borrowers. And as we've seen with the Flexibility Act, some of your wishes have come true. You do have a longer period to spend now. But as we'll see in a couple of other questions, that longer period of spending also has a longer period of testing. So be careful what you wish for. But as far as the starting point of the spending period for forgiveness, it does not start when your business reopens. And there's been nothing in either the law or in the guidance which SBA has provided, at least that I've seen, that in any way suggests that the spending period for forgiveness begins when the business reopens. It begins when the loan funds. We can't have as many different covered periods as there are borrowers out there who restart their businesses. There has to be some uniformity in all of this. So a uniform beginning of the covered period adds to the ease of administration. I mean, a number of businesses remain closed today. Hopefully, a number of you listening have reopened your businesses, have been able to begin some economic activity, but who knows what we're going to be facing in the future. If your business is closed or was closed, you can certainly pay your employees even if the business is closed. They can receive paid leave, vacations, or what have you, and all of that is good spending. How will payroll made after the end of the covered period be treated? So recent guidance suggests that payroll paid after the end of the covered period can be eligible for forgiveness if the date of the payment occurs on the first regular payday after the end of the covered period, and we are paying for days inside the covered period. So basically, SBA here is softening the paid and incurred. If the obligation for the payroll was incurred during the covered period and you pay it immediately after the covered period, that will qualify as eligible spending for purposes of forgiveness. So as a result of this recent guidance, there's no need for a special payroll. And as some of you will recall, I was advising that the special payroll was the surest way to make sure that you were treated properly. And now we see that the SBA has taken a more liberal approach. And they say they've taken this approach for administrative convenience. It's also for borrower convenience. Can I claim more than 24 weeks of non-payroll costs? Well, theoretically, you can. The SBA provided some guidance a couple of weeks ago in an example of utility cost payments. And there they said that the covered period started June 1, ran to July 26th. June 2nd, they paid utility charges for May. And July 1, they paid utility charges for June. Both of those payments, the SBA said, would be allowed in the calculation for spending eligible for forgiveness. This borrower also paid on August 1st the utility charge for July. August 1st was outside the covered period, but the SBA allowed 26 days in the calculation for forgiveness. Now, this was in an 8-week covered period, and in recent guidance, they rewrote the example to match the very same behavior that we saw in the months here. And again, the SBA is going to rely on the now 40% limitation on non-payroll charges because they think that cap is going to limit the potential for abuse here. So 24 weeks is pretty close to 6 months. It's about, depending upon the months we're looking at, 5 months and a fraction, close to 6. So in general, the 40% limitation is going to prevent using 5 or 6 months of non-payroll expenses because the proceeds that you got in a loan were only for 10 weeks of payroll. So if 60% has to be spent on payroll costs, you couldn't possibly push this far. But technically, it can be considered. I would suggest that the 60-40 test is your greater limitation there. I laid off my employees and they're on unemployment. They won't come back. What do I do? So if you call your employee back to work, they're no longer laid off. If they fail to report for work, they've abandoned their job. And if they've abandoned their job, they're not eligible for unemployment. The SBA provided some guidance in the situation where the employee fails to return and how we apply the salary and headcount tests. What the SBA said was, if we document all of this, the employee who doesn't come back will not be included in the FTE and salary reduction test. To take advantage of this, the SBA said that the employer has to send a letter to the employee advising them of the recall and that the failure to return could jeopardize their unemployment status, and they had to inform Department of Labor within 30 days of the callback. Well, recent guidance, like as recent as this week, suggested that the FTE exemption safe harbor that was set out in the Flexibility Act may have eliminated this exception for all but those situations where an employee's hours were reduced and the employer asks the employee to increase their hours back to full-time status. If that's the case, then in order to apply any sort of relief, you have to keep trying to get these employees back, either these employees or others who have the necessary skills and abilities by December 31st. If you can't get them back by December 31st, and you still have that hole in your employee workforce, then under this FTE exemption safe harbor under the Flexibility Act, you can eliminate that spot or those spots from testing. What if I cannot hire back enough employees to operate my business? Well, this is the last question provides the segue here. Flexibility Act provided the safe harbor exempting those employees from the FTE test. Employees who worked as of 2/15/20 who can't be rehired for one reason or another. They don't come back because they're on unemployment. They don't want to come back. They've moved out of the area. You have to try to hire similarly qualified employees to fill these open positions by December 31st of 2020. If you can't fill those spots with eligible people, then the fact that they're still open won't be held against you, but you need to document your efforts to hire, and you need to do all this in good faith. There hasn't been very much from the SBA on what constitutes good faith and how diligent your efforts have to be, but I suggest that if your forgiveness is riding on this, that you make those diligent efforts. This is going to be a burden because you're going to have to keep making these efforts over an extended period of time. So keep all of this in mind. I'd also think that if you're trying to rely on this exception, that you can't submit your application for forgiveness until after December 31st, because you can't document your inability to hire by December 31st if you file your forgiveness application in November, for example. How are employees who have retired or resigned treated? SBA has provided some guidance here that employees who voluntarily change their relationship are not considered for purposes of the FTE or salary reduction test. An employee who is fired for cause is not tested for FTE or salary reduction. And in this general rubric, we're looking at employees who retire, resign, or request a reduction in hours. Can a borrower claim payments to an independent contractor as salary paid to an employee for purposes of forgiveness? So independent contractors of an applicant are not treated as employees of the borrower. They themselves are eligible to apply for PPP loans based on their compensation and salary. Since independent contractors aren't employees of the borrower, we can't allow payments to them to be treated as salary for purposes of loan forgiveness. If we could make payments to the independent contractor and have that counted as good spend for forgiveness, and the independent contractor could make their own application, we would in essence be allowing a double dip. That contractor could potentially be paid twice with government money, and that's one of the things that Treasury has tried to avoid here. How do independent contractors use the proceeds of a PPP loan? This is a question I get quite often. The sole proprietor and independent contractor have a single bank account and they live out of that bank account. So independent contractors can claim forgiveness for the amounts they pay to their employees, as well as for the cost of health benefits and retirement contributions. Independent contractors can themselves be paid 2.5 months of their 2019 net profits to a limit of $20,833. Now, this amount, the $20,833, is increased again as the result of the 24-week period for forgiveness, but it hasn't been increased all the way. This is a fractional increase, and we get 2.5 months, which is roughly 10 weeks, whereas what we got previously was 8 weeks. So independent contractors, owner employees continue to be discriminated against, I guess. They're not treated as well as non-owner employees. Independent contractors and sole proprietors cannot use the PPP funds to cover the cost of their individual health insurance or retirement contributions. other employee compensation limited to $46,154 during the covered period. So everyone other than owner employees, you can spend more money, and the 46,154 is 24 over 52 multiplied by 100,000. The rent payments, mortgage interest, and utility charges that are paid by independent contractors continue to be eligible for forgiveness. And the same treatment is going to apply for the owners of single-member limited liability companies. How does an independent contractor pay himself loan proceeds? Again, another popular question. Good business practices dictate that a sole proprietor or independent contractor maintain one bank account for business and another for personal banking. Now, the PPP proceeds should be deposited, in my opinion, into the business account, and payments to the sole proprietor can be drawn from the business account either by personal check or electronic funds transfer into the personal account. This is going to provide record-keeping support for exactly what the independent contractor was paid. Can a partner in an entity taxed as a partnership be paid from PPP funds and still get forgiveness? So this would include members in a limited liability company or partners in a partnership. Employees of this entity are treated as the same as employees of a corporation, and as we've been talking about, the limit on employee compensation now in a 24-week covered period is $46,154. The SBA has said that partners or members of these the entities, either a limited liability or a partnership, couldn't make a separate application. So partners can receive distributions of PPP funds and have those distributions be eligible for forgiveness. The limitation on what they can receive is the same thing as the sole proprietors and independent contractors, everybody now being lumped into this one category that the SBA calls owner employees, of 2.5 months of their 2019 net income with a cap of $20,833. Are the rules for forgiveness any different for shareholders of an S corporation? S corporations, which are basically ordinary corporations that file elections with the Internal Revenue Service, to be treated more like a partnership for tax purposes than a corporation. Owners are permitted to be employees, but as I just mentioned, with the sole proprietors and the independent contractors, the shareholders of an S corporation are in this rubric of owner employee, and they're limited to 2.5 months of 2019 net income, but not more than $20,833. The borrower can continue to use funds for the payment by the employer, the S corporation in this example, of health insurance premiums, contributions to retirement plans on account of the shareholder employee. How does the 60-40 test work? The 60-40 test is applied to total spending, not the loan amount, unless you spend the entire loan amount on eligible expenses. And this is a little different than what we saw in the Flexibility Act. The Act actually strongly suggested that you had to spend 60% of the loan amount. And what the SBA did in guidance after the flexibility amount came out was to, was to provide that it's 60% of the loan amount, 60% of the actual spend on payroll and no more than 40% on non-payroll expenses. So if there was a loan of 200 where the amount spent was 150, of which 65 was on non-payroll expenses and 85 was for payroll, because the amount expended was only 150 and only 40% can be on non-payroll, we would only be allowed $60 of our $65 spent on non-payroll. but would be able to get all of our payroll expenditures, the $85, in for consideration. How do you calculate FTEs? Well, the SBA has been good to us. They've given us two means of doing it. One is to make a determination based on actual percentage. The SBA now says that a full-time equivalent is an employee who works at least 40 hours a week. So you determine the average number of FTEs employed for a month, and one method is to divide weekly hours by 40 and round to the nearest tenth, capped at 1. Somebody once asked me, if I have employees who work 80 hours a week, do they count as 2 FTEs? Nope, they're still 1 FTE, but hopefully they're paid as 2 and getting all that overtime in an 80-hour week. So full-time counts, the other method is full-time counts as 1 FTE and part-timers are half an FTE. Obviously, the second method is easier to employ and requires less math. Is there a staff retention period after December 31st? And December 31st now being the period by which, if you bring your employees back, you won't have an FTE period, an FTE penalty. It's now the date for the FTE mulligan. So the new period to measure FTEs and compensation costs ends 24 weeks after the loan funds, and the last date allowed for spending of PPP funds is December 31st of 2020. But neither the Act or guidance released this far creates an obligation to retain employees beyond December 31st, 2020, or the end of the 24 weeks following loan funding. So whatever you do certainly after the 24-week period is entirely up to you. So if you're eligible for forgiveness, the end of 24 weeks, if in the 25th week you have to discharge employees, I'd suggest that you're probably fine because you've only been tested through 24 weeks, not after. Why should I elect a shorter covered period? Well, one of the things that the Flexibility Act provided is that those borrowers whose loans originate before June 5th can elect an 8-week covered period. Some of you have realized that if you're tested over 24 weeks, but you only have 10 weeks of payroll, how are you going to stretch 10 weeks across 24 and still satisfy the FTE and salary reduction tests? So for those who would have a problem making that stretch because the PPP loan is the principal source of payment right now because you don't have sufficient business activity to cover this, you can elect to have an 8-week covered period. If you do that, both your salary reduction and FTE tests are going to be governed by the same 8 weeks. I think this is going to benefit borrowers who spent the proceeds of the loan during the initial 8 weeks, or those borrowers who are going to be unsure about their ability to continue to employ staff after the 8-week covered period. The election to use 8 weeks is made on the application for forgiveness. Can I file for forgiveness before the end of the 24-week covered period? Pardon me for some of those long pauses, just reaching for a glass of water. So recent guidance suggests that forgiveness applications can be submitted when the PPP loan proceeds are completely spent, even if you spend it before the end of the now 24-week covered period. An example that the SBA provided said that if you reduce the salaries of your employees over the 24 weeks below 75% of what they were paid using your average Q1 rate, that the amount of salary reduction over the entire 24-week period would affect your forgiveness. So if you have a particular employee who was paid $50 less, and that $50 was below the 75% threshold, you're going to have $1,200 reduction in forgiveness applying $50 times 24 weeks. The one thing that the guidance doesn't answer is, how do you handle the FTE test? So imagine if you submit your application for forgiveness in week 18 because you've run out of money. You haven't reduced the salaries of any of your employees. The example suggests there's no forgiveness. But if in the 21st week you fire all of your employees, you're not making the FTE test, because the FTE test is measured over a period of 24 weeks. We're all left to wonder by this example in the guidance as to whether the SBA is saying that your covered period for the FTE test ends when your money ends. Hopefully they're going to answer this question. I say that's an open question because they've dealt with the salary reduction, saying you're still charged for it, but have said nothing about FTE. So this is another case where the SBA answers one question and then creates another. And I'm sure it creates another because the CARES Act and the Flexibility Act make it pretty clear that you're testing FTEs at the end of the 24-week covered period. So maybe there's more guidance that's coming here. Can I spend the entire loan on payroll? Yes, you can spend the entire loan on payroll. The 60/40 test only limits the proportion you can spend on non-payroll expenses. With a spending period for forgiveness now of 24 weeks, and you're only getting 10 weeks of payroll, it'd be pretty easy to spend everything on payroll. And remember, the FTE and salary reduction tests are applied at the end of the spending period for forgiveness, which is now 24 weeks. Obviously, the only way you're going to make it to satisfaction of those tests, to the extent the SBA means to still apply them when your money runs out, is that your business activity has returned to the level that will allow you to continue paying all of those employees. I think that the Flexibility Act is somewhat in conflict with this guidance that the SBA is providing, and I'm guessing there's going to be another clarification in time. How does the Economic Activity Safe Harbor work? So the Flexibility Act allows for an exemption from the FTE test if by December 31st, the borrower is unable to operate at the level of activity which existed on February 15th. If that inability to return to that level is the result of complying with government regulations for sanitation, social distancing, or worker safety related to COVID-19, borrowers have to be able to document this. Now, SBA in recent guidance suggested that a complete shutdown was sufficient. Really? I don't think that's a surprise. In the example that they provided, a beauty product store was required to be closed during stay at home. And there was no discussion in that example in the guidance about what this particular borrower's business activity was subsequently by the end of the year, and how that compared by ratio to what was going on February 15th. But they said that because this borrower was shut down, that they were unable to meet the business level activity as it existed on February 15th. Again, I think the SBA has got to provide us with much more detail. None of that exists in what I've seen in the guidance. And the question we're all left with is, if I'm back at 50% of that activity, is that going to be enough? I certainly hope so, because there are a number of businesses that are going to continue to operate under restrictions, and they won't have any hope of getting back to 100% of where they were before. Another borrower asks, I received an EIDL advance. How will that affect forgiveness? The EIDL is the Emergency Income Disaster Loan, and that comes in two parts. One is an advance, like a grant, and the other is an actual loan. The grants are made pretty quickly. The loans take much longer to come through. A borrower who makes an application for a PPP loan and applies for forgiveness can't get a double benefit. So the amount of the EIDL grant is actually subtracted from the amount eligible for forgiveness. So if you have a borrower who got a $10,000 EIDL grant and a $100,000 PPP loan, all of which was spent properly, the maximum amount that borrower could qualify for forgiveness would be $90,000. The $100,000 PPP spend minus the $10,000. In total, this borrower would have gotten a $100,000 benefit, not $110,000. So there's no double dipping here, and this essentially recovers the benefit of the EIDL grant. So I've banged through, I think, 25 or 26 of some of the most frequently asked questions compiled from the 9 programs that we've done so far. I'm sure a number of you have come up with new and unique questions that I didn't have time to answer, and Dana has spent the last 45 minutes compiling those. Let's see how many of those we can get through before we all run out of gas. Dana, what do you have?
Sure. This one came up a lot. If we use the 24-week covered period and we use the money in 10 weeks, can we shorten the time and work out all of our formula based on the shorter time period?
That's a good question. One of the slides we had here focused on guidance which the SBA recently issued that says you can apply for forgiveness at any time, even before the end of your covered period. So if you spend all your money in 10 weeks, you could apply in the 12th or 13th week. The one thing that the SBA talked about in the guidance was you're still going to bear the burden of the salary reduction test for, in the case of someone whose money runs out in 10 weeks, for the last 14 weeks. So if you don't reduce anybody's salary in the 10 weeks, or you pay them at 75%, maybe that gets you a little further, the balance of your 24-week period is going to adversely affect the amount of your loan forgiveness. The point not answered is, what about the FTEs? I mean, we know from other guidance that where you have FTE and salary reduction, only the FTE applies. In answering this question in guidance, where you make an early application for forgiveness, the SBA says only salary reduction applies. So are they suggesting to us that if you make an early application for forgiveness, you just have to deal with salary reduction and FTE doesn't apply? But if you make a regular application and you have both FTE and salary reduction penalties, only FTE applies? That's certainly one way of interpreting that guidance. I think we're going to have to wait a little while to see if that's what the SBA means. As a result, if you're in a 24-week spending period for forgiveness, I don't suggest that you make an application for forgiveness early unless all of these collateral questions have been resolved. You don't want to get your application for forgiveness in under one set of rules and have the rules change 3 months after you submit your application. And if we have learned anything from our experience with the Paycheck Protection Program, the one constant here is that things always change. So let's not, in haste to get through this, put in an application that makes things worse for us because the rules change after we submit it.
Is the deadline to apply for a PPP loan still June 30th?
Well, the last day that the SBA will issue an approval number is June 30th. So I would think that today's what, the 25th. If you don't have an application in by now, you're getting very close to getting shut out. Unless you have, a lender that can turn an application around in a day or two. I would think that if you don't get an application in by Friday, practically speaking, you're not going to get a loan.
Regarding question 3 on the easy application, how can you not reduce FTEs and still claim the negative business activity safe harbor?
Well, you got to give me that one again. I wasn't taking notes on it.
Regarding question 3 on the easy application, how do you not reduce FTEs but still claim the negative business activity safe harbor?
Yeah, I don't have the easy application in front of me right now. Let's do this. The person who submitted that question, send me an email and I'll answer that question. I probably need a couple of more minutes to put a response together for that, and there's no sense in holding this process up as I gather the paperwork to do that. So why don't we skip that one and go on to another?
Sure. After 6 biweekly payrolls, we exceed the amount we borrowed. Can we include part of the 6th payroll so we don't go over the loan amount?
Well, if you have your employees employed and you're paying the payroll and you're paying them over the course of 20 weeks, you're obviously going to spend more on payroll than the PPP loan because you only got 10 weeks of payroll support from the PPP loan. The only thing you have to show for forgiveness is that you spent the money properly. So if you want to claim that you spent your entire loan on payroll, you can do that. You still have to pay your employees what they're due. And we know for certain that you at least have to pay them at 75% of the average rate of what they got in the first quarter. You have to do that through the end of your 24-week covered period. So to get forgiveness, you're going to have to pay your employees more than what you got in the PPP loan.
Do you need to let your lender know that you will be using the 24 weeks versus 8 weeks?
You do, and the way that you do is in your application for forgiveness. You specifically identify the 24-week covered period. It asks you for the starting date of the covered period and the end. And you indicate the period for 24 weeks.
With the new 24-week forgiveness period, is it possible to have a reduction in FTEs and still get full forgiveness of the loan?
If you hit the safe harbor, yes. If your reduction in FTEs is because of an inability to rehire, and that inability continues through the end of the year, you can seek specific exemption for those FTEs. Or if you're unable to return to pre-February 15th business levels because of government restrictions, you can get an exception from the FTE test. But you still have to be spending the money. So in theory, you know, if you operate a restaurant and you're ultimately going at 50% of your capacity, and because you're at 50% of your capacity, you're only hiring and paying 50% of your front end staff. If over the course of 24 weeks, that still allows you to spend the loan, and you've spent all the proceeds on payroll, and you're still operating at 50% of capacity by the end of the year, you won't be charged for the FTE reduction. So short answer is yes, but you're going to be in the safe harbor to get there.
Does an employee on commission have to be counted for loan forgiveness if he received payments prior to the loan but not during?
Yes. I mean, if they're an employee and they earn nothing during the covered period, then 75% of what they would have been paid at the average first quarter rate is going to create a salary reduction issue for you. If they're not getting paid anything, are they still an employee? You know, are you still paying benefits for this person? Are they furloughed? You know, what's their specific situation? You may have one of the safe harbor exceptions apply to exclude that employee, either for business activity or for inability to rehire.
If I used all of the loan as of 6/30, should I just go ahead and fill out the forgiveness paperwork now, or is there a benefit to waiting?
I think for some borrowers, there's no harm in applying early if you have no issues. So if all of your employees were paid above 75% of the Q1 rate, you had no FTE reductions, and you elect 8-week covered period, I see no reason why you shouldn't apply shortly after the end of the 8-week covered period.
If a borrower is not interested in forgiveness of their PPP loan, are they still mandated to use the money on payroll and utilities, or can they spend on other costs?
Yeah, I am a firm believer that the CARES Act, which enacted PPP, did two things. It put an expiration date on spending, and it provided a qualitative limitation on how you could spend the money. Flexibility Act extended the expiration date of the dollars, so you can spend through the end of this calendar year, but it didn't change what you could spend the money on. So whether you're seeking forgiveness or not, whether you spend the money during the now 24-week covered period or not, you can only spend money on payroll expenses, rent, utilities, mortgage interest, property lease payments, transportation costs. You can't put an addition on your house with it. You can't put up a new garage for your business. You can't go out and buy a fleet of trucks. You could lease a fleet of trucks and make a couple of months payments, but the government has decided what you could spend the money on. This is not meant to be an unrestricted, incredibly low interest loan program.
Do early PPP loans get the added benefits of the Flexibility Act?
They do, to the extent that you find them to be benefits. The safe harbors for exceptions from the FTE test, you clearly get. Whether or not you elect the 8-week covered period. For some businesses that haven't been able to open, the 24-week spending period for forgiveness is clearly a benefit. And being able to spend the money and have it treated as a loan through December 31st is clearly a benefit as well. All of that are benefits that borrowers who got in before June 5th are entitled to.
If I received an EIDL advanced loan before receiving the PPP loan, do I need to deduct it from the PPP loan?
So the EIDL grant, which is different than the EIDL loan, the grant you get when the application is made, the grant money is subtracted from the amount of the loan that's eligible for forgiveness. The EIDL loan itself could be refinanced with PPP money, but you'd have to repay that.
Does interest expense accrue on the PPP from the date the proceeds were received?
I do not believe so. I think interest begins to accrue after the forbearance period ends, which could be as early as 10 months after the end of the covered period, or 2 months after the date that the borrower is informed of the amount eligible for forgiveness. How about one more question, Dana?
Sure.
Make it a good one.
Okay, I'm looking for the best one. If an employee resigns, then we do not have to consider them for FTE and wages for loan forgiveness. What do I do with the funds that existed for them in the PPP loan? Can I pay another employee?
Sure, no problem. Paying another employee. I mean, if you're in a 24-week period, you're going to need the money to pay your employees, beyond the 8 or 10 weeks that the funds will last for. But the dollars aren't specifically earmarked for individual employees. They could be spent on any of them. They could be spent on non-payroll costs as well, so long as you make the 60-40 test. So I want to thank you all for tuning in to this week's installment. We're working on another program to deal with the long form application for forgiveness. We'll probably put one together for the short form as well. Look for these programs early in July. As additional guidance comes out from the SBA, we will continue to provide you with email blasts. There'll be postings on our website, and I continue to be available to answer a question or two by email, as well as to meet with you remotely in consultation to answer your questions, provide some guidance, or to work with you on your forgiveness application. Thanks again. I look forward to speaking with and responding to your questions. Hope you all have a good day. Stay safe, and we'll see you in July.